Good afternoon, everyone. Welcome to the Construct Innovate webinar series on innovation and entrepreneurship. My name is Jamie Goggins, and I'm co-director of Construct Innovate. Construct Innovate being Ireland's National Research Centre for Construction Technology and Innovation. I'm delighted to host this webinar series associated with Engineers Ireland. This week, the focus is on how to fund your research and innovation journey. This is week 7 of an 8-week series around innovation and entrepreneurship. 3 speakers again this week. So I'm going to speak firstly, which is just a general overview of how to fund research and innovation journey, I suppose with a specific focus around collaboration with third level institutions in Ireland. Then we've got Brian McDonnell, who's Senior Manager at Deloitte, and he's going to talk about R&D tax credit for construction projects. Then we've Nazakat Azimli, who's Program Manager for the Built Environment at the Laudes Foundation. And she's going to talk about philanthropic funding and why the Laudes Foundation supports initiatives related to the built environment. So we'll have the 3 presentations first, and then we'll follow that by a Q&A session. So if you have any questions for either of our 3 speakers, then please pose them in the Q&A function at the bottom of your screen. As I said, we'll do the 3 presentations first, and then we'll come with the Q&A at the very end. I'm going to give a general overview of how to fund your research and innovation journey. So here I'm going to basically quickly run through some of the research funding that's available to you in your organization to fund a research and innovation within your organization or to collaborate with third level sectors. So there's lots and lots and lots of funding opportunities available. So this is really just to give you a flavor of what's available. On the QR code on the right hand side there, you will see you can get that will actually bring you through to a link to our webpage where we've actually summarized these tables in there. So with all the hyperlinks in for each of the individual programs that you can get funding through. So the first focus is going to be on supporting talent within your organization. So basically these are funding programs that are available to be able to fund masters, PhD, postdocs, and so on. So basically researchers to work within your organization. So the first one there that I have is the Construct Innovate Work Ready Graduate Program. So this is a program that's supported by Enterprise Ireland. And effectively in Construct Innovate, what we do is we employ graduates for a year, and then we second them out to industry in there. So if you're a company and a member of Construct Innovate and you're interested in having some graduates seconded to your industry, then please do contact us, and there may be an opportunity to place somebody within your industry or within your company this year. So we've just closed the applications for graduates just recently there, actually yesterday. So what we're currently doing is going through those graduates in there, and what we will do is we will shortlist them, and then we will match make then those graduates to organizations. So as I said, if your company is interested in taking on some graduates through here, then please do reach out to us afterwards. You will need to cover 30% of the cost of that graduate. The next one there I have on the list is the Research Ireland Enterprise Partnership Scheme in there. So effectively, this is for the company to take on basically a research master's or a doctoral candidate. So research master's would normally be somebody that's undertaken a research project for up to 2 years, 1 to 2 years, whereas a doctoral candidate to do a PhD would be 3 to 4 years. So the enterprise partner would be expected to commit €11,300 annually towards the cost of funding the researcher. If it's a master's student, it would be up to 2 years. A PhD student, it would be up to 4 years. And that enterprise partner could be a company or a registered charity, a social, culture, non-for-profit, civic organization, and so on. It's currently closed for applications, but will be open again around this time next year, or probably next February or March next year. But an organization can express an interest at any time. So if you're a company that's interested in taking on masters or PhD students to do a project, then please do go onto the Research Ireland website and express your interest so that your company can be named there. So the researcher gets 25,000 per annum. It's a stipend, and obviously the funding also covers their fees and some cost towards doing the research as well. The next one I have here is Innovate for Ireland Industrial Partnership Scheme. Now this recently closed as well. It's a new program that was opened this year, but it's expected to open again next year. The maximum budget for direct costs to support a student is 180,000. So effectively what this funding does, it supports a 4-year PhD student in there. These are meant to be PhD students, or I scholars as they're called. who have entrepreneurial capacity and are interested, around entrepreneurship as well as the research side of things in there. So they have, they will be very strongly linked with the industry partner in there. There are already a number of companies signed up to this program, the Innovate for Ireland program, the iScholar program, and again, you could join up with that. So again, if you're a company that are interested in this, please do reach out to us, and we'll help you along that journey. So that's kind of taken on people with bachelor's or master's degrees. These set of programs here that I have are to take on people that already have their PhDs or already have their PhDs got. So the PhD STAR program is an Enterprise Ireland program. It's a new program in there. It's a rolling call. Effectively, the idea here is to embed innovative PhD graduates, graduate capability in your R&D and innovation strategy within your organization. So basically, somebody that's recently finished their PhD, take them on within your company. It's a 2-year program in there. The Enterprise Ireland will contribute €62,000 over the 2 years to recruit the PhD graduate and support the salaries for 2 years. And the company also puts in €62,000. Enterprise Ireland will help with talent matchmaking. So basically, they will matchmake the graduate, the PhD graduate, to the companies in there. If you have, you must have at least 5 full-time staff in Ireland to take on 1 graduate. If you have 10 full-time staff, you can take on up to 3 graduates in there. So it's a rolling call. You submit your expression of interest to Enterprise Ireland for that. The next one is the Research Ireland RD&I Fellowship Programme. So these are to take on a fellow in there, an academic fellow. So this could be somebody that's like a lecturer in the university, a postdoc, so somebody that's already has their PhD and working as a researcher within the university, or somebody that's just about to finish their PhD. And the idea is that these academic researchers want to spend some time in industry to get that industry experience on temporary placement. So somewhere between 1 and 12 months full-time, or between 2 and 24 months part-time. So in the Research Ireland RD&I Fellowship Programme, what will happen is that that Research Ireland will provide between 25% to 80% of the total costs of having this academic researcher and spend time in the company, up to €100,000. So that is expected to open soon, as normally the close date is around June each year. So we're expecting that to open soon and close around June time. Next one there, the third one down on this list here, is the Research Ireland Enterprise Partnership Scheme at the postdoctoral level. So this is kind of early career researchers. So effectively someone that's just finished their PhD and for them to go and work in a company or an enterprise. So that enterprise can be a company, a registered charity, a social, cultural, or non-for-profit civic organization. Could be a state-owned enterprise or public body in there. So somebody that will co-fund the researcher for the duration of the award. So it's a 2-year award in there. There's a fixed salary there for the early career researcher in there of 46,714 for the first year and approximately 48,000 in the second year in there. And the enterprise partnership is expected to commit around 19,000 in the first year and just over 19,000 in the second year towards the cost of there. And then the Research Ireland programme will cover the remaining funds. It's expected to open pretty soon, around Q2. So it's expected to open very soon, that programme. So they're sort of to support, to fund people coming into your organisation, working within your organisation that either have master's or PhD qualifications already. The next set of programs I'm going to go through are programs to help fund collaboration with research performing organizations, in other words, universities, to develop innovative solutions. So you might have ideas for developing innovative solutions. Can you fund that? How can you fund that in there? So we go from kind of very small level funding up to very large funding here through this list. So the first one are the innovation vouchers that are available from Enterprise Ireland. A standard voucher is €10,000. So these are very, very easy to get. So basically, if you want to get, dip your toe in the water, start to collaborate with some universities or a university, then you can get these innovation vouchers. Effectively, you get €10,000 of a voucher that you can spend on with a university to do some research and innovation for you. They're exclusive of VAT, so you'll be charged VAT by the knowledge provider, and then that needs to be settled by the company separately. You can get for these innovation vouchers without having to put anything into it other than pay the VAT. And then the fifth voucher that you get, sorry, the fourth voucher that you get you can get three vouchers in there without having to put any matching funding. For the fourth voucher, you have to match up the funding. So effectively, you put in €10,000 and you get €10,000 of the voucher as well. So there's a rolling call there. It's usually processed every 4 weeks or so. So again, that's a really good one for you to dip your toe in the water, to be able to do a small bit of research with a third level organization. The next one is the Innovation Partnership feasibility. So effectively, Enterprise Ireland fund innovation partnerships. So it's a partnership between a company and a third level organization. So again, one of the universities in the Republic of Ireland. You have to be a registered client of Enterprise Ireland, the IDA, or the LERO, the local enterprise office, or the Laudes and Nazakat in there. You have to be based in the Republic of Ireland, and effectively want to collaborate with one or more research institutions based in the Republic of Ireland. So this innovation partnership, you can start off with a feasibility study. So there's a grant available of €9,000 in there, and that helps to see if this idea that you have for collaboration with the university is feasible or not. And then from that, then you can go on to the phase 2 of the full proposal stage for the innovation partnership, which I'll talk about in a minute. The next one there at the bottom of the screen there is the Construct Innovate Seed Fund call. So this is a fund that we support directly out of Construct Innovate. The available budget is €50,000 per project with 30% overheads for the universities. It effectively has to be a collaboration between at least one research performing organization and at least one company. The company has to be a member of Construct Innovate, so either an associate or patron member, and a maximum 2 applications can be accepted by the collaborative partner. So that's currently open with submission deadlines of the 31st of May. The matching funding that's required is €15,000 from industry, and that's a mix of cash or in-kind in there. Okay, so moving up then. So they're kind of, as my colleague would say, they're kind of the breadcrumbs. They're just kind of starting ones. Now we're on to more of the lunches, the bigger kind of funding ones here. So the Enterprise Ireland Innovation Partnership one. So these are kind of €100,000 plus projects. The Enterprise Partnership Innovation Programme provide grants of up to 80% towards the eligible costs in there. The company needs to provide a minimum cash contribution of 20% of the total project costs. The company has to be, again, a registered client of Enterprise Ireland, IDA, the local enterprise office, or Laudes and Nazakat. There's just check the website for when the closing dates are. The projects are expected to run between 12 and 18 months in there. And the idea then is to for collaboration between universities and companies in terms of the innovation ideas in there. The next one there at the bottom of the screen is one that's actually it's just for researchers in the third level sector and non-for-profit research agencies in Ireland. Why I have this here and why companies might be interested in this. So for example, if you get involved in the Construct Innovate Work Ready graduate program, and you get one of our graduates seconded to your company for a year, that graduate is will be an employee of the University of Galway. So therefore, they are eligible to apply for this. So they could apply for this in the first year on the Work Ready graduate program with you. They could apply, for example, for €15,000 to do some to pay for an independent industrial expert consultant to do a feasibility, to conduct a market opportunity assessment and explore potential routes to commercialization. Then the next step could be the proof of concept, so up to €100,000 over a 12-month period to help bridge that vital gap between the initial research and the commercial market. And then move on then maybe to the third phase of it, of commercialization fund for the projects ranging anything from 80,000 to 450,000, or could even be bigger in the life course sector in there. So each of these kind of phases are expected to take 6 to 18 months in there. So for example, as I said, you could have somebody that's seconded to your company to the Construct Innovate Work Ready graduate program, and then straight away start to look at the feasibility study, the proof of concept, and so on, and get additional funding then that could support that person to work for a following year or 2 years on that idea that you are developing with the person that's on secondment to your organization. So the next one here of collaborative opportunity to help support you grow your innovative ideas is the Research Ireland Strategic Partnership Programme. So the Research Ireland programme must be a minimum of €400,000 in there, meaning the total award size, so that's the Research Ireland part, and the co-funded partnership is a minimum of 800,000 because it's a 50-50 funding here. So there's no maximum level required. So these are for large, large collaborations in there. So effectively, minimum project size of 800,000, minimum amount of cash input from the co-funded partner will be 400,000, 1 to 5 years duration. Applications are by invitation only, so you need to send in an expression of interest into Research Ireland, and then after they evaluate that, they will decide whether to invite you in or not. So you need to be a member of that academic staff or contract staff that aligns with the priorities of the area to be able to get involved in this. The next one there at the bottom of the screen there is Interest Ireland Disruptive Technology Innovation Fund in there. So this is a large projects again, minimum funding of 1.5 million over 3 years in there. So it's a collaboration between the SMEs and potentially companies in there. So you need to have at least 2 SMEs involved. SMEs can claim no more than 50% of the eligible costs, whereas large companies can claim no more than 40% of the eligible costs. However, research organizations like the universities, they can claim 100% of the eligible costs, but they can't have any more than 50% of the grant in there. So, as I said, each project has to have at least 3 independent partners seeking for the Disruptive Technology Innovation Fund, at least 1 SME and 1 other enterprise partnership in there. So how does that work in reality? So if it's a €1.5 million over 3 years, let's say if half the money goes to a university partner or a research organization, that's 750,000. They're 100% funded from that. The other 750,000 has to come from the companies in there, and they have to match it by 750,000. So effectively, you're looking at a minimum project size of 2.25 million, with at least 750,000 coming from the companies and the 1.5 coming from the Enterprise Ireland Fund. Okay, so they're just some examples of funding support that's available to help you collaborate with universities and support you to grow in your innovative ideas. The next set, and I'm just running out of time here, so the next set I'm going to run through are very quickly just examples of how you could get funding directly from government agencies to respond to research challenges that are set by government agencies. So there's a number of SEAI programs here. There's 2 on this page. I think there's 1 on the next page. There's an academic fellowship program in there, and there's an SEAI-based fellowship program in it. So these fellowship programs effectively are that SEAI will fund a fellow to carry out specific work, and the aim is to build capacity in the energy sector, provide opportunities for early stage postdoctoral researchers to lead projects in support of Ireland's clean transition. So there's the 2 fellowship programs are closed next month on the 14th of May. There's the DAFM, the Department of Agriculture, Food and Marine, Thematic Research Calls 2025. So you have standard, large and strategic projects. So the standard projects are up to 750,000, the large projects up to 1.5 million, strategic projects up to 3 million in there. So this is a call that's expected to be open around now in there. So DAFM provide specific, or have specific projects and specific topics that they want people to do some research on. So you in your company or in your third level organization could apply for this funding. And typically what happens is that there's a collaboration of companies or organizations that come together to bid for each of these project areas. The one at the bottom of the screen there is the Research Ireland Frontiers for the Futures program. In there, so the projects are between 200 and 600,000. The awards are between 600,000 and 1.5 million. It's a program that's that Research Ireland run. There's collaboration in GSI, SEAI, and Children's Health Foundation. Projects provide for funding for basically high risk, high reward research that facilitates highly innovative and novel approaches to research. So it's high risk, high reward type of projects. It's a rolling call for the awards currently. We have the Construct Innovate Productivity and Digitalization funding that's going to open very soon. I think it's €50,000 per project. You must be a member of Construct Innovate to be able to apply for this. There's no minimum matching funding required. but effectively the project proposals have to lead to increased productivity or increased adoption of digital tools or technologies related to delivery of housing and support the Housing for All strategy. The next one I have there is the SEI or D&D call. There's effectively small, medium, and large projects. The maximum budget for a given project is up to 1.25 million, but this is projects that are topics and project areas that SEI have already set out, but actually there's an open call as well. So you can have your own project ideas that you can submit to this as well, as long as it will contribute to Ireland's transition to clean and secure energy futures. It's expected to open soon. Normally it's closed around June every year, so we'd be expecting that to open pretty soon there as well. It's 100% funding for non-economic public good research and between 25 and 80% funding for experimental development and industrial research. And the last one here on the list I have is the EPA research call, because that's open currently, closed on the 29th of May. There's a total budget of up to 6.6 million available. The project sizes are between 165,000 for a small one, there's 330,000 for a medium-sized project, and 660,000 for a large project. Each of those projects are expected to last between 12 and 28 and 48 months duration, so between 1 and 4 years. The specific topics and projects that are listed in the EPA research call document in there, but you can see some of the themes there, the cross-cutting topics, the climate change evidence, the delivery of healthy environment, facilitating a green and circular economy, and protecting and restoring our natural environment in there. So all of these, if you spend money on research and innovation within your organization, you will be able to qualify for an R&D corporate tax credit there, which Brian is going to talk about in a little bit more detail after this presentation. So we have pulled together all of this information with all these different funding sources within our website on constructinnovate.ie innovation support, or if you scan the QR code there, you will be brought directly to that website. Or if you have any further queries in that, please do post them in the Q&A function after the presentation here, or email us at info@constructinnovate.ie. So hopefully that gives you, an idea of some of the types of funding that's available to fund your research and innovation within your organisation, and how you can collaborate with the third level sector, the universities in Ireland, through Construct Innovate. So without further ado, I'm going to introduce our second speaker. Our second speaker is Brian McDonnell, who's Senior Manager of Deloitte, and he's going to discuss now about R&D tax credits for construction projects. So over to you, Brian.
That's great. Thanks very much, Jamie. Hopefully you can all see my screen and hear me okay there. So as Jamie gave a pretty comprehensive overview of the various different types of, I suppose, grants that are available, I suppose what we'd look at is anything that's applicable to that, or if those are relevant to your business, we definitely encourage that you're looking at how you can claim R&D tax credits around that. So I suppose my name is Brian McDonnell. As James said, I'm a senior manager in Deloitte's Global Investment and Innovation Incentives team. So I suppose as a group, we're the largest internationally grants and innovation sustainability specialists in the world. There's over 1,500 professionals looking at, I suppose, incentives like the R&D tax credits, like European funding and national funding as well that's available. We have teams all across Ireland in Dublin, Cork, Galway, Limerick and Belfast. And we also feed into a European Funding Centre of Excellence that's run by Deloitte. So that gives you access to that entire network if there are any of the higher value, higher innovation projects that might be relevant to yourselves. So to give a sense in terms of what we're going to be covering today, it's really looking at the R&D tax credits. And then, as I said, Jamie has given a pretty comprehensive list of incentives there, but how do they all interact with each other? And I suppose our role is to work with companies to make sure that they're maximizing their total funding that they can receive for projects, because as you said out there, a lot of the projects that Jamie was talking about there are that early stage investment, looking at upskilling people, looking at the role of PhD researchers within projects and the innovation partnerships that are there. They all tend to be at the very early stage of a project. As you move further on, then you might have the likes of RD&I funding, you might have Horizon Europe, there could be EU Life or EU innovation funding, but R&D tax credits and I suppose capital allowances are the tax levers that are used to try and encourage investment in in innovation. So as you look at them there, it's a little bit busy, but overarching R&D tax credits are pretty much available throughout the entire amount of the project. It's just important to know when to actually claim them and what's required for it. But as we said, the overall aim is how do we combine these together to try and reduce your total investment? Because if you think about it, you've got €1 million project and you can get a 25% grant on that from RD&I, be it through Enterprise Ireland or the IEA. There's 750,000 there that's remaining that you can get a tax benefit of 30% on in form of an R&D tax credit, and that pretty much supports half of the overall cost of a project. So importantly, how do you actually claim the R&D tax credits? You're dealing with revenue, you're making a claim directly to them. Nobody wants to be audited and try and hand that money back. So it's important to get the claim right in the first place. So R&D tax credit's been around for the last 21 years. It's now a 30% tax credit. It's fully repayable, so it's a cash refund that you get. But you have to make that claim yourself. It has to be part of your corporation tax filing. You need to make sure that you're claiming that correctly and within very strict timelines for it. So for expenditure that's now going to be forming part of that, you've got 12 months to the end of your financial period to make that claim. It covers a broad range of costs, and it can be used to I suppose for R&D centres, for R&D buildings and refurbishment. There's a possibility of getting 30% back on those costs as well. So as I said, it is self-assessed. It's important to note that revenue can come back and they can go back over a number of years of claims. So it's important to get the claim right. You need to have contemporaneous documentation there, and we would always advise that you seek professional advice to make any claim that's there. Okay, so first of all, what is the R&D tax credit in terms of what are the requirements for you as a company looking to make a claim? Well, first thing, you have to be a qualifying company, so essentially you have to be trading. You have to pass an accounting test, and you have to pass what's known as the science test. And this is often what puts a lot of companies off claiming. But again, if any of the things that Jamie has spoken about already are relevant to you and your company, I think you really should be considering these. So if we look at a qualifying company, basically, are you trading? Are you under the charge of Irish tax credit? And are you undertaking R&D activities in Ireland, the European Economic Area, or the UK? There's, I suppose, obviously in the case that any costs being included can't qualify for a tax deduction in another country. But they're normally fairly straightforward ones to identify. Once you're making a corporation tax credit or corporation tax filing, you should be able to make an R&D tax credit claim. When we look at the costs that can be included, they're broad. You can include your fully loaded payroll costs, any direct costs, any materials that are being used for an R&D project can be included. If you're purchasing equipment, plant and machinery, they can all be claimed at the rate where they're going to be used for R&D over their entire life. You can apportion an element of your overheads, and for any subcontractors, whether they're independent contractors or third-party contractors, whether they're universities, you can claim up to 15% of your total in-house qualifying expenditure. The final point then is there's a separate piece of legislation. So if you're developing an R&D centre, or a building that's going to be used for more than 35% of its time as for the purposes of qualifying R&D, then you can claim the apportionment of that building that relates to its R&D usage. So again, it's a very valuable incentive that's there for you, and you really should look at it. So importantly, the work has to qualify. So when we talk about the science test, this is what revenue will really focus on in the event of any audit that they're looking at. So the work has to meet all of these qualifying criteria. So it has to be systematic, investigative, or experimental. By that, we mean there has to be a planned, logical approach to the work that's been undertaken. It can't be ad hoc in nature, and you need to have evidence of the work that's been undertaken. So you have to have documentation there to back up any of the costs that are going to be included. The work has to be in a qualifying field of science or technology. So any field of engineering, once the work isn't, market research, business research, looking purely at the ergonomics and behavioral sciences, then it'll qualify for an R&D tax credit. And it has to be in a qualifying category of research. So where Jamie was talking about the funds that were available to support PhD candidates and masters, they tend to be more in applied research. The vast majority of claims that are made in the country are in experimental development. So by experimental development, what revenue mean is work that's been undertaken to achieve an incremental improvement in a product, in a process, in a material. There's a huge array of activities that can be included within that. But most importantly are the last 2 points. The work must seek to achieve scientific or technological advancement, and in seeking to achieve that advancement, it must resolve a scientific or technological uncertainty. So by advancement, essentially what revenue means is that you're seeking to gain new knowledge, something that isn't already there in the public domain at the outset of the project. And the uncertainty is essentially the challenges that are associated with achieving that advancement. So it can't be apparent to competent, skilled professionals who are working in the industry. And there has to be an element of challenging aspect of the project that's going to resolve experimental activities to overcome that uncertainty that's associated with the project. So where do we see it in construction? I suppose we don't see a huge number of claims in the construction industry, but it's really looking at work that are examples where we could see qualifying projects is where you're working with academics on projects. Are you looking to support a PhD project? If you look at your staff and the makeup of them, if you've got a lot of PhD, a lot of master's qualified project employees, if they're undertaking work that isn't solely focused on meeting regulatory requirements and signing off on plans and projects that they're within the spec, what are they actually doing? Are they looking at developing new processes, new techniques? Are they looking at working with new materials and material science, looking at how you can make projects more sustainable? Looking at very challenging sites, whether it's, how do we actually demolish the building that's already there? Or are geotechnical studies required? Or is there a huge amount of design that's required at the front end of the project before you can actually begin work on it? These are all things that need to be considered beforehand. And as well as any new technologies, any new techniques that are being brought into your overall production processes. So I suppose it's really looking at projects that are challenging, that are not run of the mill, and looking at how you can actually, I suppose, document and record those projects as you're going through them, because revenue only want to support what they define as qualifying R&D. So the work that meets the criteria that's set out, and they will only support work that's, I suppose, it's only deemed as being qualifying once you've identified your scientific or technological uncertainty, and then the work that's been undertaken to resolve that uncertainty is your qualifying R&D. So once you've resolved your uncertainty, the work is no longer qualifying R&D from revenue's perspective. Or before you've identified what that uncertainty is, it's not qualifying R&D. So it's really looking at how do we demonstrate to revenue that we've undertaken that assessment of the activities that have been completed, and how you're undertaking work to resolve the uncertainties that are there, and how they're being documented then throughout. But there's a huge number. It's not linear. It's not straightforward. There's always an element of work that's required, speaking with your engineers and going through each individual project on its own merits, trying to identify what are the actual qualifying activities that are being undertaken within that, how they meet the science test, the definitions that are set out there, and then trying to gather all of those costs that are associated with them. And again, back to the importance of good documentation and processes and controls, because revenue can go back over 4 years, audit any claim that's been made in that stage. And what they want to see when they're looking at that is, right, well, what are the qualifications of the team? what are the processes that you're looking at? So was there an assessment and a due diligence process at the outset of the project to see, right, well, what was within the scope of qualifying R&D and what fell outside of that? And then what supporting documentation's there? So do you have project plans? Are you setting out what was you're seeking to achieve at the outset of the project? Do you have detailed records of work that was actually undertaken? Have you got the results and evidence of analysis? Have you got timesheets? Because as we looked at all those costs that were there, materials are obviously going to be a big cost, but the high value, high skilled people who are working on that, if you're claiming a high percentage of their staff time or staffing costs, then you need to be able to evidence what that was. So do you have timesheets, or do you have a method of apportioning people's time that you're reviewing on a regular basis? And that's really it. I suppose if there are any questions, we'd be glad to take them afterwards. One point that's just to call out is that there's an ongoing consultation at the moment with the Department of Finance. So I've got links included on that, and I think the presentations will be shared after this. But really, if you want to view the consultation, we'd really encourage any company to make a contribution to this. If there are any thoughts, or if you want to reach out to us to have a discussion around how we can fit that in, or if there's any questions in terms of any projects that you may have, I've got my contact details there. I'd be more than happy to make contact afterwards. So that's me. I'll pass back to Jamie unless there's any questions.
Brilliant. Thanks, Brian. That's great. In there, look, I think the construction sector are relatively poor at claiming R&D tax credits relative to other sectors within the organisation. I think we definitely need to encourage more people to claim them as well. And I know a number of people, say here on the call, are undertaking say masters or postgraduate diplomas in, say, construction innovation in there. So that means that part of their company might have allowed them part of their time to do this research and innovation through some formal learning, but because they're actually doing research projects as part of that over the year, then potentially some of their salaries could be also used to write against some of the R&D tax credits. So yeah, so that's fantastic. So we're on to our third speaker. So as I said, if anyone has any questions, please do post them in the Q&A function at the bottom of the screen, and we'll come to those at the very end. So we're on to our third presenter in there. So our third presenter is Nazakat Azimli, who's program manager for the built environment at Laudes Foundation. And she's going to talk about philanthropic funding and specifically around the Laudes Foundation and why they support initiatives related to the built environment. So over to you, Nazakat.
Yeah, thanks a lot, Jamie. Hi, everyone. So I'll be talking about Laudes Foundation, and within that, I'll give an example of how philanthropists support research and innovation, and why, in general, Laudes Foundation supports initiatives related to the built environment, provide the rationale for that within our strategy and vision and mission. So let's look into what the Laudes Foundation stands broadly for. We were created in 2020 to support brave action to inspire and challenge industry and business to transition and advance a green, fair, and inclusive economy. We tackle climate change, nature and biodiversity loss, and social inequality. Laudes Foundation was funded by the Brenninkmeijer family and business owners, and will build on the 6 generations of entrepreneurship and philanthropy, and work alongside other network of the philanthropic organizations. So as a philanthropic foundation, our vision is economies that value all, people, climate, and nature, and our mission is to support brave action within industry, as I mentioned before. And in order to achieve this vision and mission, we work together with our partners and to date we have been working with more than 600 partners since our launch, and our primary function is to award grants to organizations with transformative ideas, scalable solutions, with the aim of achieving the greatest impact in our global economic system. So with that in mind, there are 6 programs that we work across and 4 industries that we look into funding the change in. One of them is built environment, where I'm the program manager, but we also have programs in fashion, finance and capital markets, and food. And then we have also cross-cutting programs on narratives and labor rights. So we, as a foundation, focus on just transitions, and we employ the definition of the ILO on the just transitions, where a just transition is greening the economy in a way that is fair and inclusive to everyone concerned, creating decent work opportunities and leaving no one behind. And industry is, again, central to the approach that we take across people, climate, and nature in this. So we focus on the just transitions and the communities impacted across the key industries that we're working in to center the communities, workers, and the communities impacted by the transition. The built environment. So our vision for the built environment is a regenerative and inclusive built environment that prioritizes decarbonization and well-being for all. And why do we specifically focus on the built environment industry and work on it? Well, basically because it is accounting for the nearly 40% of the global greenhouse gas emissions. If you count the total emissions, both from production of the materials and of the buildings, then it is accounting for 30% of the European-based production. There is 11% of the global workforce engaged in construction. And then we also, all of us spend 90% of our time in buildings. So it is a very central part of our life economy. And that's why it is one of the industries that we focus on at Laudes. And to achieve our vision on a regenerative and inclusive built environment, we have taken primarily 4 approaches. So setting pathways and shifting rules, where we focus on setting up the roadmaps for what the transition of the industry for a greener and inclusive future looks like. And then also making sure that our legislative environment and the policy environment is enabling that. With enabling a just transition, we're focusing on the communities impacted by the transition most, and in case of the built environment, that will be the residents and workers, and making sure that the risks and opportunities for those communities are taken into account and addressed. By accelerating investment, we're looking into the financial products and to see, to identify the products that can really enable the net zero transition and the just transition. And with scaling the bio-based materials, we're looking how the timber and other bio-based materials can be on the same level playing field with the traditional construction materials due to their ability to sequester carbon, but also emitting less. So where did we start as a program? Like when we started, there was a lack of regulation in the built environment, especially on the whole life cycle and resource efficiency. There was way more funding going towards the operational and energy efficiency, whilst the focus on the whole life carbon was definitely much less. So we set for ourselves as a trajectory that where we want to go with the partners to have the EU and the national level policy that sets embodied carbon limits and the targets, and then also we have the critical mass of industry implementing as a result of that. Then we have started an environment where there was lack of investment into net zero and carbon efficient buildings. And here again, as I mentioned, we wanted to transition to an environment where we have significant increase in uptake of the new and existing financial products, so that there is more alignment with net zero carbon and circular pathways in the finance system, since investors are playing such an important role in the demand side of our industry. Then we are also the narratives and the needs around the equity and inclusion of the communities weren't really clear and were not being really addressed in the industry. And then also transitioning, also it was unclear what would it mean in the context of transitioning to a net zero carbon and circular built environment. So our program set us a trajectory to have a built environment that is increasingly incorporating and really addressing the approaches that enhance equity and inclusion. When we started the program, there was mostly the willingness to use wood in buildings, and depending on the context that we're talking about, there were different reasons for that. So the trajectory we set up on together with our partners was to achieve that sustainable wood is a central part of the built environment, and it is seen as a solution for the transition of the built. So the geographic scope within which we found when we started, we were focusing on the EU 27 and the UK, and as we're moving forward with our strategy on also just transitions, we see that the just transitions are very place-based, and we need to make sure that our ecosystem of the partners are connected to each other and are implementing what is needed for the change hand in hand. So we're currently narrowing down our geographic focus. It is still thinking in progress, but it will be still within the countries within the EU 27 and the UK that we'll be focusing in. Then I think here where it gets kind of more interesting for this particular audience, because I think we'll look into what are the approaches that we're using in order to change the European built environment. And you would see that the scaling research and innovation is one of those approaches. So as I kind of was referring, for example, accelerating advocacy is one of the approaches because of this lack of the regulatory environment that would enable and put forward the change. So that's why we are focusing on building the capacity and scaling the advocacy efforts of the partners around the regulation that would enable that change. So that was in the case of the built environment, there was a very much primary focus on the energy performance of the buildings directive at the EU level, and for that to include the provisions on the whole life carbon for at the moment it is for the new buildings from 2030. So a set of our partners have been advocating for it, and now they're also looking what that implementation of those policies at the national level looks like, and how to provide necessary guidances and tools for the implementation of that. Then another approach that we're working through is strengthening the accountability. So it's looking into funding the mechanisms that include transparency to also include transparency initiatives to motivate and progress and enforce standards and protections in the industry. And then we're looking into scaling research and innovation. And I would go a bit more into detail what the scaling research and innovation does look like through some of our partners in the next slide. But it is generally about looking into funding the tools, the research gaps that would enable action and would lead into implementation of the solution. So it's always related to that solution ecosystem. Then we're also working on the cultivating alliances, that approach, because we know that no single partner, no single stakeholder will be able to foster this complex change and transition. So that's why bringing together partners and coalitions and networks and movements is a very important approach that we use. Amplifying narratives, especially in the built environment, changing what the dominant narrative around the economic, across all of our programs, but I work at the built environment I see the lack of this actually quite a lot across our field, but like what are the alternative narratives that will help us to change the dominant narratives and to really set out what the future of the green transition should look like. And then we have the reimagining of the system here. We're looking at models that are really working both for sustainability and inclusion, and then what are the model mechanisms for scaling up those. So in scaling research and innovation, I just wanted to kind of draw attention to a couple of the partners that we are funding, where their main mandate isn't only doing the research, but it is part of the approaches that they're employing in order to achieve the mission and the goals of their initiatives. So, for example, maybe for some of you, Indicate will be known is a life cycle assessment data accelerator that has been looking in its first phase across 3 pilot countries, including Ireland, and then Spain and Czechia, to improve the quality and the quantity of the whole life carbon data at the building level that would help to set the benchmarks at the national level relevant to the building context of the specific country, and then that will also help with policymakers with setting up the limits and the targets of the whole life cycle emissions from the new buildings. So again, research, developing the methodologies, deploying the data, bringing this all together and negotiating it also with the stakeholders was the main part of this project. But again, research was part of this multi-stakeholder setting that we have helped to bring together and have facilitated as Laudes. So, and that is the case across other partners as well. For example, we have a newly funded initiatives on homes that don't cost the earth that is looking into tackling the single and narrow approach towards solving the housing affordability crisis only through the lens of build, so building more. And we know that building more isn't usually the only answer actually for addressing the housing crisis, because that would also mean that we surpass our carbon budgets only within 2 years or even less, depending on the context of the EU country or also the UK. So what are the alternative solutions that can help us to address the affordability crisis, but also stay within the carbon budgets? And within that project, it is bringing a number of stakeholders across industry, academia, communications, research together, but and communities as well. But research is one element of it because it feed to fill the evidence gap and the knowledge gap that exists there in order to help with the dialogue with the stakeholders, the advocacy efforts, and also to craft what the future of the housing that is both sustainable and affordable looks like. And that will be the same for other partners listed here as well. For example, PPIE is the main think tank on the buildings in Brussels, and they've been advising policymakers on what the future of the transition of the environment look like in terms of the policies and the regulation at the EU level, and what the implementation of that would look like at the national level. And then again, they produce research as part of the evidence base, evidence making for the policymakers, and that's kind of also part of their bread and butter. So yeah, as a philanthropic foundation, we do fund research, and then also as an observation from the field, philanthropists tend to fund research either when there is a research gap in the field, the knowledge gap, to fill that. There will be usually RFPs going out that would, in some cases, be public, and then you would see that there is a gap that philanthropists see in order to feed into their strategies and form their strategies. So that's one type of research, and then another type of research would be within the broader consortium and coalitions that would help to take the action forward. So our usually mantra is that no research without action. So we really follow into that, and that's what distinguishes philanthropic funding from the pure scientific funding or the funding that goes on to academia only. And then I would say, just to provide what of some of our partners' achievements in the past 3 years was just to also illustrate better what the program has been working on in the past 3 years. We have had more than 600 companies that have co-created 10 national decarbonization roadmaps in the World Green Buildings Council's Building Life project. So that is looking in the context of a specific country, what the decarbonization road pathway for the construction built industry is. Then we have the APPD that includes now for the first time the provisions on whole life carbon. We have more than 1 trillion assets under management using the carbon risk real estate monitor to align with science-based targets on construction. We have then also 245 billion the revenue of the companies committed to Race to Zero by COP27 was 245 billion. We have also the growth in the UK green mortgage products, thanks to the Green Finance Institute's work there. And then we also have a recognition at the EU level that the wood and the timber can be part of the solution for the transitioning the built environment in Europe to a more fair, green, and sector that also takes into account nature. And that was one of the key pillars of the new Bauhaus initiative announced by Ursula von der Leyen during her first term. So this is kind of the achievements of our partners in the past years. And then here I will close and any questions that you might have. Philanthropic funding or Laudes Foundation. Thanks a lot.
Brilliant, Nazakat. That's fantastic. There's a lot there, I suppose. Just put that in perspective, I suppose, for some people here at this webinar. In there, having somebody like the Laudes Foundation come in, I suppose, to provide that independent funding in there, but also that network is really, really important in there. So a couple of things mentioned there with the Indicate project. So, for example, Laudes funding the Indicate project brought together. The reason why that was funded was because the ingredients we had in Ireland were the leaders within the government, so within the SCAI, who were responsible for implementing the EPBD, so the Energy Performance Building Directive, which requires us to measure the amount of carbon associated with the construction of our buildings, not just the operation, but also in our climate action plan in Ireland, that is required by 2025, by the end of this year, to have a methodology for doing this. So because we had champions in the government, say the public sector, we had the academia available, which was ourselves in Construct Innovate, and then we had access to companies in there through our members of Construct Innovate. And because we had that mixed together, but the public, by the government buy-in, the researchers that could do the work, and the company buy-in in there, and that allowed us then to develop this methodology for doing whole life cycle carbon in Ireland. Had over 50 buildings that were able to be assessed in it by lots of different consultants across the country and so on. And that was funded by the Laudes Foundation, but then supported by it. And the magic that came around that was, yes, the funding, but the access to the experts across Europe in there. So, I remember the starting point of that, where we had maybe a bit of resistance from some people within the government, and then by bringing our friends over from Europe, it says, hey, don't worry about this. You don't have to wait for Europe to tell you the direction, because we know the general direction. And by the way, in Denmark, in France, in the Netherlands, we've already done this, and we've already set targets, and we're already way ahead of that. So don't worry. And that gave confidence to our senior civil servants to go ahead with that. So philanthropic funding and the likes of the Laudes Foundations aren't just about philanthropic funding in itself, but also about that network and that coalitions and the partnerships that go together. And similarly, I suppose the great work of these decarbonisation roadmaps across Europe. I think there's 10 of them that have been supported through the Building Life project. And again, the Irish Green Building Council in Ireland would have developed the roadmap for Ireland in their huge consultation across the industry, but also using the expertise within our third level sectors. So our colleagues within UCD in Construct Innovate would have done a lot of the research to back up that roadmap, to make sure that roadmap was robust as well in there as well. So again, this is sort of bringing people together, groupings together, and having this common drive across Europe, and it really helps to accelerate what happens locally within our own countries. And that the timber is obviously something we're really interested in Ireland as well. And there's the government have set up groups now, or a group in terms of timber and construction, and then what are the barriers, what are the opportunities? It has industry, it has the government agencies in there, the government departments in there, and the universities involved in that. And we hope that that's going to help to drive the use of timber more in Ireland and so on. So really exciting side. So I suppose between our three presentations together, I concentrated on kind of national funding. I hadn't time to go into the Horizon Europe funding. Obviously, that's a whole other ball of money that's available, I suppose, to help collaboration between companies in Ireland and across Europe around research and innovation in there. And that'll take a whole other webinar to cover that. Brian covered about the R&D tax credits and really showing how that construction can avail of these more than what we actually are currently doing, and maybe it's a revenue income into your organization to be able to offset some of the costs of the research and innovation, and then from the Laudes Foundation showing that this sharing of knowledge, building the networks across Europe, and having this common goal, and say, well, look at these are our drivers: lack of regulation, lack of investment, equity and communities not being considered, and unwillingness to use wood. Let's look at those are the kind of challenges. What are we going to do about it? And to have someone like Laudes, who would I suppose the initial Monday from the philanthropic organization didn't come from the construction sector, it was developed in another sector, but that they saw that the built environment was really, really important.